everybody. I see lots of people refilling their coffee. This is the session I am most excited about. I'm not supposed to say that. I'm supposed to say all the sessions are equally fantastic, but really and truly, I'm so excited that Peter Jacobs made the trip from the Netherlands. I think he wins the award for traveling the furthest distance. Because when you see what Peter is doing at ING Netherlands, I think you'll realize that if you all did exactly what he's doing, we wouldn't need to be in business anymore. And that would be great, because it would mean that we're making such dramatic progress. So I think you're going to be really excited about what he's been up to. Peter and I first met last fall. We both had the honor of speaking on a panel at the United Nations. The occasion was the 15th anniversary of the incredible work around financial inclusion that Queen Maxima of the Netherlands, Peter's queen, has been doing. And at that event, Queen Maxima also announced that her mission going forward was not just financial inclusion, it was financial health. And so before the session, Peter gave me a sneak peek of what his remarks were going to be. And he shared with me their incredible efforts to measure financial health and to use it to influence the way they design products and market them. So that's how I got so excited and invited Peter to join us. And so we're going to have a free-flowing conversation about why he's doing this, how it works. He's also he and his colleagues have written a case study about what he's doing. And that is going to be available to you on the conference app. So take notes, but there will be a cheat sheet later for all of you if you want to replicate what he's doing. So Peter, welcome. Thank you for being here.
Thank you so much for having me. It's a great honor to be here today.
Yeah, let's give him a round of applause. So why? Why financial health? How did you get interested in this, and what led you to do this work?
Yeah, I think that so ING is a quite large bank in Europe, and in the Netherlands we have about 8 million customers and a few hundred billion in our balance sheet. And I think you start to look a bit at what is the purpose of banking. Eh? And I started to understand that if you look at the Netherlands, then people are actually quite happy. In terms of happiness score, we're doing quite well. If you then look at sustainability scores in terms of building a future for the country, you see that we're not as good. I think in the UN ranking, we're only country number 20. And it means that people enjoy a bit more today than they're building the future for tomorrow. And if you look at the United Nations Development Index list, you see that some of the highest ranking countries are also some of the happiest countries, which basically means that there is no rule that you can't invest as much in tomorrow as you enjoy today. So basically, as a bank, we also state that we want to basically contribute to building prosperity for the long term. And that means, of course, planetary health, but it also means financial health. And looking at financial health, we came to the conclusion that if you're in the red, you will never act green. People who basically are struggling financially will have difficulty to understand what they need to do to actually survive. And I think that yesterday, also the phenomenal speeches of the two pastors and the shows we saw yesterday, many of the conversations also on the panel today, make us aware that we have to strengthen a bit the people we serve. And what I started to see in ING when I became a CEO 2 years ago is that people were quite proud on how we're doing with this entire topic of sustainability. Because every year when we had a barbecue, there was a vegan option, so that makes everyone, and if there was a team event, we would do some plastic fishing, and so we were having quite a bit of impact. And we felt, okay, but that cannot be enough. And I think that what we needed to do is get financial health in the DNA of banking. So not as a kind of an NGO, let's do good on Friday afternoon, but how do we do good in the way we work? And that means for me that the products we offer need to be very good for our customers, they need to be very good for society, but they also need to be very good for my shareholders. I'm not an NGO, a bank is not an NGO, it needs to also have a commercial benefit to us. So looking at how do we ensure that we do good for both the bank and its customers and society, at least gets it a bit out of this kind of we do good spirit into the heart of who we are. That's a bit on how we started.
Yeah. How did you first hear about or learn about this concept? Was it from the Queen?
No, I must admit that we have a great team, and Japke, who's with me today, she's been working for years on this topic, very much engaged and very much inspired by this beautiful American institute called the Financial Health Network. So a lot of what you're going to see today is merely just adopting what you have basically brought to us.
I did not ask for that reason. That's kind of you to say.
Prepared as well. So.
Right. Mutual fan club. Let's get into it.
Very good.
Let's talk about how you're measuring financial health.
Yes. So what we started to do is we needed to build a model, and I don't know if you can see the slide already. Otherwise, I'm going to click on the slide. Let me see.
You could
I have to
go back to the first.
I go back to I think this slide.
You got it.
Here you see the Financial Health Network. So what did we do? On the left side, you see basically 4 large rows. And those four large rows are a reflection of the 4 pillars of how the United Nations and how the Financial Health Network have defined financial health. It's all about not spending more than you actually have. It's all about making sure that you're financially resilient. It's all about making sure that your debt is sustainable. And it's all about planning for later. And we said, okay, we're a large bank. Now let's have a look at our customers and start to see if we have metrics that we can actually measure. And if we have those metrics, then we allow people to earn up to 2 points on every individual metric. So if you have 5 metrics, you see all 5 mentioned over there, then you can have a score between 5 times 0 is 0, or 5 times 2 is 10 points. So you have a 10-point scoring model, which typically reflects in the Netherlands how you are graded in high school. I can imagine that you would do it in an A to F model. I don't know exactly where the B plus is, but this is for us the 0 to 10 score. So now let's look at this. We said, how do we measure if people have money worries? We looked at, hey, money worries, what do we see as a symptom of money worries? Those are typically direct debits that fail. A failed direct debit is for us a symptom. So if people have more than 8 direct debits that fail on an annual basis, they get 0 points. If it's somewhere between 3 and 8, we say it's somewhat okay-ish, you get 1 point. And if you have less than 3 failed direct debits or 2 failed direct debits, then we would say you're doing actually quite well. It might have been a mistake. So you earn those 2 points. And here you see that we have 5 of those metrics. The second one is that we say the number of months with expenses less than 90% outflow, the number of months that you're financially resilient. So this is how we track it. And we get to a score between 0 and 10. And then the second step that we did, if we now look at the score, we say that everyone with a score of 0, 1, 2, or 3, we call those customers, they are stressed. So we have stressed customers. If you're a 4 or a 5, we think that you are vulnerable. If you have a 6 or a 7, you're coping. And if you're above, then you're healthy. So now you start to see that at least we get a bit of a flavor of how is the customer base of ING divided over this score. So this is how we build the score.
Let's talk a little bit about the specific metrics.
Very good.
Because, as you know, when we first started designing how to measure financial health, we did it by survey. And a growing number of companies are experimenting with using their own transactional data. And in fact, on this stage last year, the then acting controller of the currency, Mike Hsu, who's here this year with us, announced an initiative by the OCC called Vital Signs, which was really encouraging banks to use their transactional data to measure a few key things and keep their finger on the pulse of people's financial health. So in a way, when I look at what you're doing, it really very much is in sync with that and builds on that. I think one of the complexities is picking the right metrics. Say a little bit more about how you chose those.
Yeah, again, I think that what we try to do is stay as close as possible to the metrics that we saw that came from the Financial Health Network and came from actually the UN. So in terms of the definition of what the metrics are, at least we were encouraged and inspired by institutes who had quite a bit of research on the topic. If you then look at what are the thresholds, then there might be something biased towards a certain society or not. But this is something that I would say for us, this is a very big stick in the ground. We're also quite open to understand if there are better, of whether we should change our metrics. But at least for me, the most important thing is perhaps not if someone has a 6 or a 7. What's more important, and I will highlight it a bit later in the discussion, is if we introduce new propositions, can we then statistically see actually whether the financial health score is going to increase for those who use these propositions versus those who don't use them. So for me, it's, whether we're absolutely correct or not is perhaps even a bit less relevant than using the model to actually track basically behavior over time and see if you can influence the financial health of the customer base.
How hard are these metrics for you to gather and track?
No, that is, I should say that is the luxury position in my role that nothing is difficult, but but I must admit that I think that it also for the organization was quite okay. I must admit the biggest challenge for us also to prepare and coming here is the legal implications, also the compliance implications. Europe is a continent with extreme laws, and I think also rightfully on data privacy, and looking in transaction data, understanding why people spend their money, on what they spend their money, that is all almost forbidden. So, and I think that we are now in a situation that since we are doing macroeconomic research on the impact of our propositions to the financial health of our customers, we are allowed to use control groups of people for whom we 100% more or less know that they only bank with us, where we can actually see what it does. And since we have proven statistical relevance, we don't have to calculate the score anymore for all our customers, where we might, even on the borders of that population, start to doubt, is he now only with us or also with a competitor? So basically, that has helped us tremendously. So I think that legal and compliance was more difficult than data scientists.
Interesting. So tell us the next step. You've measured a core base of your primary customers.
Yes.
Then what?
So the first thing we started to do is a bit look at the Netherlands. So where are we today? And this is a bit of the picture of where we stand today. So the first step is to understand a bit what's happening in society. And you see in the Dutch society, about 38% of the people is at least in a somewhat challenging, vulnerable or stressed situation. And listening to the stories yesterday, that might be somewhat comparable to the US, although also listening a bit in the US, it might be that the percentage of stressed people, if you hear the stories, might even be a bit higher over here. But at least we get a nice flavor. I think what's also important that if you basically look at the slide, the first time that I looked at this slide, I almost said to my teams, let's stop all this nonsense. Because if you see that it's quite stable over time, then you can start to ask yourself the question, is there any impact in all the work we do? But then we went a bit deeper, and which is also for me at least was very, very at least encouraging. We started to look if some customer has a score, let's say his score is a 6 out of 10, and then we look a year later and we start to look at the same customer, what percentage of customers had exactly the same score as last year? So how stable is it underneath? And we started to see that only 30% of the people had exactly the same score. That means that 70% of the people either grew in score or declined. But that growth and decline is quite symmetrical. So what we now need to do is make that delta a bit less symmetrical and make sure that the people who grow in score is more than the people who decline in score in a way that it's good for our customers, but also financially good for the bank. And that's what we're trying to do. So the first step that we try to take is let's understand where we are, and let's then also start to understand what we can influence. A last comment I wanted to give is that if you introduce a proposition, and I'm going to give you some examples, if you introduce a proposition, and I'm going to give you one example, let's say round up and save, then at least this modeling also helps you to understand, did we reach the target audience? Is this product now consumed by typically people who are already healthy, or is this not typically consumed by the people who are stressed or vulnerable? So having this modeling paradigm in place helps you big time to also being able to ask yourself the question, is my marketing correct and am I achieving my goals?
Yeah. Let me point out a couple things about this slide. Not surprisingly, financial health in the Netherlands is higher than the United States. So if you look at the healthy bar, we're closer to somewhere between 31 and 33%, generally speaking, healthy in the United States, just as a comparison. I think this dividing financial health tiers into 4 as opposed to 3, others have also moved in that direction. It's something that we're looking at as well. And because I really like how it creates a little more fine grain between people who are kind of coping and kind of maybe towards the positive, and vulnerable ends up being coping but kind of towards the negative.
Yes.
So I like that a lot. And we see exactly the same phenomenon around what I like to call the chutes and ladders, because our financial health pulse, which has been going for 7 or 8 years now, and it has a longitudinal feature. So we've been tracking some of the same people over the last 8 years, and that's exactly the same thing. Our numbers are relatively steady at a macro level, but for us, it's 25, in any given year, 25% of people are moving significantly so that they end up in a different tier. Yeah. Your analysis is finer grained than ours is about how many points they're changing, but we see exactly the same thing. And that's what we like to talk about, that there are important things that we can be doing, both to prepare people for the inevitable storm that's going to happen and leak that's going to happen in the roof, and also in good times, the raise you get and how you might be able to take advantage of that. So the story is very similar across our 2 countries.
I think what's also a bit interesting is, and I think it's also important to state, I've mentioned to you that it should also be somewhat good for the bank. And the bank, we have, of course, you're looking at revenues, at income, how can you grow your revenues? And secondly, how can you also make sure that you minimize your costs? So we also started to look, if you look at a call center, in the Netherlands at ING, a call center you don't call for advice. If you need advice, you go to an advice center. A call center is typically to overcome friction. So you start to ask yourself the question, how often does someone call our call centers? If you look at people who are stressed, they on average call 0.9 times a year. Yeah? If you look at the people who are vulnerable, coping, or healthy, and especially healthy people, they are below the 0.4. So you're going to see that the amount of calls they make to the call center is less than half of those who are stressed. So you immediately start to, if you look at cost of arrears management, then you start to see that nearly all the cost of arrears management is in the stressed population. For us, there are big numbers. If you're going to look at the risk cost, and then if you're going to look at the risk cost and you compare them among the 4 buckets, you're going to see that the bank is paying nearly all of its risk cost to the people in the bottom area. So also in terms of cost reduction, helping people to get out of the stress level into vulnerable, coping, and healthy has, I think, quite a bit of a positive impact.
So let's now go to the next step.
Yes. So what is the next step is that we started to see, and this is the first slide, and we are far from complete. This was we had to work hard to get in time for San Diego, but at least what we try to do is take some of our propositions and plot them here. And for me, they were quite interesting. Let me give you the example. I'm first going to give you the example of, let's say, automatic savings. Automatic savings, you see it over there. What does automatic savings means? It means I incentivize my customers to almost have a direct debit towards their own deposit account. So every month you basically transfer automatically some euros to your account. What we start to see is that this has quite a strong positive impact on financial health. How did we measure this? We looked at people who are stressed, and out of that population we started to see that some people started to use this feature. Then we tracked those people for 12 months, and we started to see after 12 months using this, what was for those who started to use this, their improvement in financial health in a stressed category versus those who did not use it. We also did it for all the other layers, and we took a nice average which is now in the 0.5. So this basically means that in our 1 to 10 scale, after using this for 12 months, you see that you help people with almost 0.5 points. So this is something to be proud of, and it works. For the bank, it also works. I was talking to one of the colleagues in the audience who works for a US bank. He also explained me that I think that in the US at the moment for retail deposits, there is, let's say, on average, a kind of a 200 basis points of margin. I can, every dollar that you get in, you have 200 basis points additional as an income side. So that's the y-axis of the chart. If you then look at the x-axis of the chart, there it says, what percentage of stressed and vulnerable customers are now actually using this? And here you see that it is less than 25%. So although it also for that category has very strong positive financial impact, we do not seem to be able to reach the appropriate target audience. We need to fight harder in our marketing, in our campaigning, to get the product. And therefore this slide helps us to understand that if you need to move to the right, that is all about campaigning. If you need to move up, that's all about product redevelopment. I'm going to give you one example. Roundup and Save. If you're going to look at Roundup and Save, we actually put quite a bit of money in building that tool. And I think it was Bank of America, perhaps even 25 years ago already, showing to us on how to do it. We were a bit slow, but we learned. And at least we now provided this. But in all honesty, if you look at Dutch society, you see that there was, if you really look well, you see that it has a slightly negative impact on financial health. I still have no clue why that is the case. I need to find out. Perhaps the money is insufficiently sticky. I don't know how it works, but we need to redevelop the product, and you could almost say, I'm very happy that not a lot of stressed and vulnerable people are using it because it's not helping them at all. So there you start to see this is an example of how you need to push up. So for every proposition, we need to understand where it brings us. And yesterday, Jennifer, I had the luxury in the plane for 10 hours to read the phenomenal new standard that you published yesterday. But what we will do is we will at least also take all the 15 elements of the standard and start to measure them. The majority we have, some might not be relevant, like Spanish or alternative IDs. But for the rest, we will at least also come back to this audience and help you to at least understand what the impact on the Dutch society is. And of course, it might not be completely identical, but I think it might be somewhat at least inspirational.
Our first commitment, I'm going to thank you. So let's go to the negative outcomes slide first, and then I have some more questions for you.
Yeah, the second one is that you also start to look at mitigating negative impacts. And here we look at consumer loans, we look at overdrafts. And some of them, you could say, as a bank, if you look at this, let's stop overdraft or let's stop a consumer loan. Well, I don't think that is in the interest of society, also not of our customers. But at least we need to understand well what the impact is. And try to mitigate unnecessary friction or unnecessary pain points. And I think that also in the breakfast meeting this morning, I think with Citibank, I think it was very well explained in the panel on that at least some of the more exotic stuff you should not do, that we at least are aware of that. And I think that also my commitment is that we are honest and transparent about the product offerings that we have and that we bring them on this slide. What is at least for me more important is there are also some, I would almost say, some behaviors in society that might not even be completely linked to our offering that are very relevant to potentially track. I think in the Netherlands we saw that about 5 years ago the law that prevented online gambling was stopped. You started to see that online gambling became quite big in the country, and we have not yet basically modeled the impact of online gambling, again because of all kind of compliance and privacy laws. But I can imagine that if we would plot online gambling, you would see that had a quite, I think, tough impact. Buy now, pay later is another one that at least we have to be careful in how we do it. And you can, so those are at least some of the elements that we're considering. To what extent should we plot them, see them, and see what we can do them? Not to stop everything that is at least causing a decline, but at least to be considerate. And I think at least that you understand what you're doing to society.
So I know that this analysis is relatively new. Have you yet shared this internally at the bank? And if so, what has been the reaction?
No, of course. I think that we share this quite a lot. I think everyone likes it to a certain extent because, again, this is for us a bit of a symptom of bringing financial health in the DNA of the bank instead of just next to it. It gives people a bit of purpose, and it's a nice content challenge. If you look at some of those elements like the Roundup and Save team, they now understand, hey, we need to go back to the drawing table and find out why it is not working. So it's good. I think it's good. Yeah.
Is this at all changed the way you set up incentive structures within the bank, either for your senior leaders or for frontline bankers?
No, I think that one of the key priorities for us is at least that we are to some extent ambitious in what we do, and that is also financial health, on the planetary health, but also on the P&L and the financial health of our firm. So that should not be a trade-off.
Yeah.
And I also must admit that the examples that I gave, they're financially good, but they're of course not, this is not 20% of the revenue of the bank. Let it also be very clear. This is somewhat smaller, but at least it's also not negative. No, but overall, this is not. It's not the biggest pillar in terms of the financial commitments of the bank to its shareholders. But at least it's good. It builds. I think it builds also a bit of that people feel that what they're doing makes sense. A bit of that they're proud of the work that they do. Purpose for the people who work. I think that is very important.
You mentioned to me yesterday, or maybe it was Japke that mentioned to me that you have been successful in influencing your peers in the broader ING family on this topic. Can you say a little more about that?
Yeah, of course. So I do the Netherlands, and of course I have colleagues in Belgium and in Germany. But it's one big family. So whenever there is something cool and good, then we apply it everywhere. And I think that this has been seen by everyone as cool and good. So now we replicate it across Europe, and we're quite large also in Australia. So you can expect that's a second commitment that we will do this on a broader scale. And that also helps us to test in these different markets how sensitive is the model to the society you serve. Because there are differences. The economy in Spain is different from the economy in the Netherlands.
You've heard it here. Europe is way ahead of us, people. So, come on.
Yeah, I don't know that.
You've talked a number of times today about some of the elements of the business case. Put it all together for us.
No, I think that if you look at I think that number two, financial health is all about making people somewhat more resilient. And the way that a bank does it, it's about ensuring that people save a bit more, either through deposits or investments or any kind of product you have. If you then see that you strengthen basically the liability side of your balance sheet without any capital that needs to be deployed, then it has a very positive impact on your return on equity, which is of course also very much appreciated. And yes, those are small steps, but why not take them? So that's number one. Secondly, I can imagine that some of you might say, yeah, but Peter, that's a bit too simple, because on the other side of the balance sheet there are assets, and you're providing loans, and are you still committed to providing loans to society? Well, the answer is yes, yes, and yes. Of course we are. But I think that mitigating the effects means for me, don't give people a loan of which you know that they can't repay it anyway, because the cost you need to make in terms of the risk cost, in terms of the cost to serve and to handle, I am a bit doubtful to what extent you would ever make decent money on those kind of propositions. So ensuring that you provide loans to people who can actually repay this, while on the other side strengthening the liability side of your balance sheet, has a positive impact for the bank.
I saw you this morning in the session around measuring financial health, which was both about consumers but also small business.
Yes.
I'm wondering if you've thought about this at all in the context of small business.
Yeah. No, I must admit, I think we're proud that we came so far, but it's an excellent question. And if you look at small businesses, we tend to understand that there are 3 or 4 different segments in the businesses. It starts with the self-employed, and the self-employed, and I think I was also given this morning at the breakfast meeting, you see that the self-employed is almost, there are no 2 sides, there are no 2 faces, it's all basically mixed together. So we have to look at that as well. Pensions, insurance, how you plan for later, what you offer, how you offer. Have we started to build a similar model for those? Not yet. Would I be open to it? Extremely. So let's see if we can learn and perhaps do this together. If you go to the larger companies, to basically the financial health of the true enterprise. So if you would do it to a company with, let's say, revenues of 15, 20 million, or a company with a revenue of 200 billion, then I doubt whether the model would really be applicable.
Yeah, agreed. So, what is next? This is a relatively new effort. I mean, Jaap's been at this for a long time, but in terms of taking it to this level.
Yeah, I think that's we brought it at least into the DNA of who we are and what we do. We recognize the value and the steps, so that's good. We have a model that makes it at least a bit structured and that we can actually track and see what's happening. So that's good, but that's not yet impact. And that is, of course, now we need to drive impact. And for me, impact is that at least we start to understand for all the features that we deploy, what is now the impact, and that we also start to measure a bit what does it do both to the bank and to its customers. So I think that scaling this through Europe, making sure that we also take the standards, making sure that we are transparent and honest about what we bring to the market and what the impact on our customer base is, and then to see how we can encourage more people, and I'll give you one more as an example, more people as an example on investments with pension propositions, more people in automatic savings, more people in goal-based savings.
Other side. You already saw this one.
Yeah, no, but that's also the one I mentioned.
Oh, okay.
I'm sorry. That is a bit on getting people a bit, move those positive ones to the right, I think is for me very much next. Yeah.
Let's use our last few minutes to pivot a little bit and talk about employers.
Yeah.
You've mentioned the positive impact to your workers of this work, but there's also a much bigger initiative in the Netherlands that you are a big part of that's trying to bring this message to employers. Can you say more?
Yeah, we built basically a group of the largest companies in the Netherlands. So those are the big banks, the big semiconductor companies, the airlines, so all these kind of big names. And we basically said, what can we do as an employer to strengthen the financial health of our employees? And so we started to at least come up with some smaller steps that I think help quite well. The first thing, and I think that was also very well discussed yesterday, is that people in financial stress feel a bit of this guilt and shame to talk about this. So at least let's make sure that through our intranets and the stuff that we do, that we get a bit of the taboo away from the topic and make this something that at least people feel proud to talk about. Secondly, you start to see that sometimes there are these wage garnishes, I think, that are being called, that all of a sudden people call us as an employer and say, hey, please don't pay Jennifer her own income, but first pay me 60% of it because she's in debt with me. And of course, it requires all kind of legal grounds before you're allowed to do so, but it happens. And HR in the salary payment, of course, sees it. So how can we help to guide people to organizations who can help those people? So at least make that quite, I think, vocal. Number 3, also measure the financial health of all those employees. And then not through the banking side like we do today, but a bit more survey-based about how do you feel and how do you doing this. And I think that's very much in line with, I think, that also discussion that I saw this morning. I still believe that also the subjective way of asking people, do you feel, also makes sense. So those are a bit of the initiatives that we're undertaking with all the large employers to at least see how we can influence the millions of people that work for us collectively.
I think I read that to date, given the employers at the table, this reaches about 800,000 people, which is significant in a country of 8 million.
It's still about, if you look at the country, it's 18 million. If you look at the amount of people who are basically working, then let's say 60-70%. So you see that we're not yet reaching the 10%. So I think that there is still a bit of room to grow. And but the reason we do it with the large employers for now, it's because it's quite easy, because every one of us has quite large HR departments who can actually help the execution. If you want to scale this down more to the SME side of the society, it's a bit more difficult. So we're trying to find out ways on how also to reach the people who work for smaller companies.
Yeah. So this crowd is used to me asking and challenging and cajoling and prodding. What would you leave this audience with? What would you encourage them to go do as a result of what they've just heard?
Yeah, I think that's so what I love about the event and also being here together is that you see, and I think that's today it's me sharing something, but yesterday it's someone else, and tomorrow, not tomorrow, but at least we see over the coming days that a lot of people share different lenses. And at least I'm committed to see how we can bring some of those lenses together. I think that if you started to see, as an example, yesterday, US Bank explaining how they do their outreach through their branches. And I think if you would couple that with the standards about not how you serve people, but what you do, and you connect it, for example, to the modeling that we do, and you start to integrate some of those, that's, I think, the beauty of being together in a community. So that would be at least number one. And number two, I also felt a bit that it took me a bit of conviction to get it into the DNA of my organization instead of in the corporate sustainable kind of NGO side of the bank. And I think that would at least be, I think that some organizations are not there yet, at least what I've seen yesterday. And that limits a bit your impact, because I think that if you would be working in a very large bank and would say, today I invest, let's say, $10 or $15 million a year on this topic, and you would go to your CEO and say, I want to do this 10 times bigger, then I think that he or she might say, ooh, you're going to give me a heart attack. I don't know how to explain this to my shareholders. Well, if you basically do this from a revenue generating angle, although it's quite small, there is nothing wrong about growing something that has also financial value to you as an organization. So, and I think that would help you at least to get a bit out of the constraints that I experienced in my discussions, at least.
So now I hope you understand why I was so excited about this session. I really want to thank Peter, or I think it would be Peter if I were working on my Dutch. Not only for what he's doing, but for his leadership. His CEO isn't going to reward him because he came to the United States to talk at our conference about what he's doing. This is really clearly a work of passion of his. And so please help me thank Peter Jacobs.
Thank you. Thank you.